Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or what we call the NDX, which is the home of the most innovative companies, top 100 in the Nasdaq index. Joining us for this segment, we have Nick Kalivas. He is head factor and core product strategist over at Invesco. Nick, it's great to see you again. Welcome back to Trade Talks.
Thanks, Jill. It's a pleasure to be here.
All right, Nick, and let's talk about weekly performance that we saw in the Nasdaq-100, and of course, all the major averages seeing a little bit of chop over the past couple of weeks.
Yeah, they have been a bit choppy and a bit volatile here. The Nasdaq 100 ETF, Trust ETF QQQ did lag the Russell 2000 and the S&P 500 by about 150 basis points over this last week. And I think a lot of it has to do with some of the economic data that we saw. Strong PMI, strong payroll data. And I think that kept the market a little more interested in the broader market stocks, those smaller stocks, and a little bit less interested in mega cap growth. You know, the economy weighted PMI was 68.2. That's actually the high that we've seen for the cycle. The unemployment rate fell to 4.2. Number of people employed in the household survey, 1.1 million over the past 4 months, creating about 2.5 million jobs according to that survey. So it's very hard for the Fed not to remove stimulus, which has been a bit of a headwind to some of the growth names. That economic dynamic, I think, was complemented by the fact that the Omicron variant didn't look so severe when we got in here Monday, Tuesday after the weekend. And I think that caused a more broader interest in the marketplace. And then lastly, you know, some of the earnings we saw from DocuSign kind of complemented some of the poor earnings we saw from Zoom the week prior, and that took a little bit of the luster away from the Nasdaq 100.
Right, which is so interesting because you would think, you know, DocuSign and you think about Zoom, those are two companies that we're certainly not doing away with. I can't imagine going back to signing, you know, paper documents and not having a virtual environment, which makes it so interesting. But of course, it's why there's rotation in the market. So, Nick, speaking of rotation and where we saw attribution in the Nasdaq 100, where did you see outperformance and what weighed on the index?
Yeah, so it was a little bit of a tough week because by sector, really every sector was a drag on the Nasdaq 100. The biggest drags came from consumer discretionary, which was kind of Tesla and JD.com kind of jumped off the page. If you go into technology, it was kind of DocuSign, AMD, and Zoom were providing pressure. And then in healthcare, Moderna struggled a bit in the last week in the wake of some of the concerns over what the new variant might mean.
Right. And Nick, to wrap up here, you know, I can't believe we are just a few weeks out from the end of 2021 and looking towards 2022. How would you grade earnings season for Nasdaq 100 stocks?
I mean, it's been very. I think generally it's been very good, very strong for the big names. I think it's been a little bit less for some of the smaller names, but the earnings outlook really remains quite good as we go into next year. And in fact, if you kind of look at one of the graphics I have, you can see that red line at the bottom. That's 2021 earnings. You see they've been being revised up all kind of year. The blue line, what you see is next year, and you can see that's been a little bit flatter here in recent months. But as you go out to 2023, again, that kind of uptrend, gradual uptrend is in place. And in fact, if you were kind of worried about it, you have to think about the fact that earnings are supposed to rise 9% next year for the Nasdaq 100. And then, you know, another over 12.5% when you go into 2023. So there's a pretty strong trajectory here that appears in place, and that's actually a bit more than what you're supposed to see in the S&P 500 over that time period, where it's about 7.5% for 2022 and about 9.5% for 2023. So growth and earnings still look very vibrant for the Nasdaq 100.
All right, Nick, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.